So let's be honest. Are you still just saving all your money in cash? If that's your game plan heading into 2026, we really need to have a chat. Because believe it or not, that strategy is quietly wrecking your financial future. So today, we're going to build the exact blueprint, super beginner friendly, that I would use if I had to start investing from zero, right now.
And that brings me to this one simple question I want you to ask yourself. Because honestly, for millions of us, the answer is a pretty shocking yes. Now, I know the number on your bank statement isn't going down, but its real value, what you can actually buy with it, well, that's shrinking every single day.
And this right here, this just lays it all out perfectly. See, we're all taught to save money, which feels safe, right? Like we're hoarding it, protecting it. But the real goal, the game changer, is investing, which is all about making your money grow. Saving cash means it's constantly losing value. Investing, on the other hand, is how you actually build real long-term wealth. They are two totally different things. And the bad guy in this whole story? It's inflation. I love this analogy. It's like a silent, invisible leak in the bucket that's holding all your cash. Every year, it just drains away a little bit of your purchasing power. That $100 you have today, it simply won't buy you the same amount of stuff next year. So investing isn't just about getting rich, it's about plugging that leak and actually keeping what you have.
Okay, but wait a second. Before you go throwing your money at the stock market, you've got to build a solid foundation first. This is not about gambling, right? This is about being smart and responsible with your future. And that means getting your own financial house in order before you start.
So here are your 3 big safety checks. These are absolutely non-negotiable. First, you have to get rid of any high-interest debt. Seriously, paying off a credit card that's charging you 20% interest? That's like getting a guaranteed 20% return. No investment on earth can promise that. Second, build that emergency fund. We're talking 3 to 6 months of essential living costs. This is your safety net, so you never have to panic and sell your investments at the worst possible time. And third, lock down your budget. You need to know without a doubt how much money you can consistently put to work every month.
Foundation in place? Awesome. Now it's time for the fun part. The actual, actionable 5-step blueprint that will turn you from a saver into a real investor. Starting today. Step 1 is all about your timeline. Why are you investing in the first place? The stock market is for your long-term goals, things like retirement or building wealth over the next decade or two. But if you're saving for, say, a down payment on a house you want to buy in 2 years, that money needs to stay safe. It needs to stay in cash. Investing is only for money you know you won't need to touch for at least 5 years.
All right, step 2, you got to pick the right account. And this is a bigger deal than you might think. Why? Because certain accounts give you these huge tax breaks that let your money grow way faster. If your job offers a retirement plan, especially with a company match, that's literally free money. That's your #1 priority. If not, you've got to look into the other tax-advantaged accounts out there. This is a crucial step. Don't skip it.
Okay, step 3. What do you actually buy with your money? Well, funny enough, the most important piece of advice here is what not to do. And that is, do not, I repeat, do not try to pick individual stocks. Just trust me on this, it's way, way harder than it looks, and for a beginner, it's basically just gambling.
Instead, you're going to focus on these, index funds. So what are they? Think of an index fund as buying a tiny slice of the entire stock market. Hundreds, sometimes thousands of companies, all in one single purchase. This makes them instantly diversified, super cheap, and absolutely perfect for beginners. It's the simplest way to get those historically reliable returns the market offers. Step 4 is maybe the most important one of all. You just have to start. So many people get paralyzed thinking they need a ton of money to even begin. You don't. The habit of investing consistently, month after month, is so much more powerful than the amount of money you start with.
You don't believe me? Let's just look at the numbers. This, $140,000, you know what that is? That's roughly what just $100 a month could grow into over 30 years, based on historical market returns. That's the mind-blowing power of starting small and just sticking with it.
And the magic behind a number like that? It's compound interest. I absolutely love this wealth snowball analogy. Your money earns a little bit, then that little bit starts earning its own money. And over time, that snowball just gets bigger and bigger, rolling faster and faster, growing like crazy without you having to lift another finger. And the final piece of the puzzle, step 5, this is the secret sauce that makes it all work. You automate everything. You set up an automatic transfer from your bank to your investment account, and you schedule it for the day after you get paid. This takes all the emotion, all the second guessing, all the oops, I forgot out of the equation.
You're paying your future self first, and the whole thing just runs on autopilot.
So now you've got the whole blueprint. But you know the how-to part? That's actually the easy part. The biggest hurdle for pretty much every investor is learning how to master their own psychology. And this is the #1 fear I hear all the time. It's the big question that keeps most people on the sidelines forever. What if the market crashes? It just feels too risky to put my hard-earned money in there.
Let's just look at the history, the hard data. Over the last century and a half, we've had something like 19 major market crashes. And you know what happened every single time? People freaked out. They panicked. They all thought, this time it's different. But what was the result? Every single time, without fail, the market eventually recovered and then went on to hit brand new all-time highs. That volatility, that's just the price of admission for long-term growth.
This quote just nails it. It sums everything up. If you're watching the market go up and down every single day, you are going to drive yourself absolutely insane. But if you can just zoom out and look at the trend over 10, 20, or 30 years, all that daily noise just disappears, and that long-term upward trend becomes crystal clear.
So here's the bottom line. Waiting for the perfect time to invest, it's a losing strategy. The biggest risk you face isn't a market crash. It's the absolute certainty of getting left behind by inflation because you were too scared to ever start. The best time to plant a tree was 20 years ago. The second best time is right now. Okay, we've covered a ton of ground here. So let's boil it all down into one simple single-slide action plan you can use.
This is it, your complete blueprint. Number 1, build that foundation. Get rid of bad debt, save for emergencies. 2, set clear long-term goals. 3, open the right kind of tax-advantaged accounts. 4, buy those simple, boring, low-cost index funds. And 5, the real secret, put it all on autopilot and just learn to ignore the daily noise.
So, I'm just going to leave you with this final thought. 30 years from now, you're either going to have a pile of savings that's worth less than it is today, or you're going to have actual wealth. The choice is completely yours, and it all starts with that first, small, automated step. So which one are you going to start building today?